In today's video, we're going to be showing you the two most important levels you should be watching going into the next week. Along with that, we're going to be doing a full technical and structural analysis on all time frames. Let's dive into the video. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be showing you the two most important levels you should be watching for a breakdown or a continuation upwards. By the end of today's video, you will have a comprehensive and detailed understanding of not only the short-term price action, the macro price action, but also the implications of these levels. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical and structural information, the relevant news events, and economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, Bitcoin, and the economy. If you are interested in our trading channel, you can join our VIP. It is our VIP group. We have over 600 members. We post trading signals of exact entries, exact targets, exact stop losses, justifications, and detailed charts. Along with that, you'll get access to a multitude of group chats, including our trading and chart group chat, where we post a variety of different charts of all our members trading on a daily basis. Our trading education group chat, where we teach you guys how to trade, our general chat, our videos, our news chat, and so much more. If you're interested, join us via the link in the pinned comment in the free channel for more information. Let's dive into a video, starting off with the market data. So how are we looking as of today? Bitcoin is down 32.81% in terms of 24-hour volume, sitting at 33 billion. Now, this is not really too unexpected. The weekend volume and volatility generally does drop quite a fair bit. Looking at 24-hour liquidations, we are down 16.51%, sitting at 44 million. As per the monthly returns for Bitcoin, August is down 0.72%. Still relatively early in the month, a lot can change. Moving over to September, we can see September is naturally a very bearish month with only 2 months that have been green. Very interesting, something to keep your eyes on. Looking at the liquidation data with 44 million in liquidations, we have seen a very even split between both longs and shorts. And this is very expected and very normal over the weekend, as we have a lot more compression, a lot more indecision, a lot more consolidation, and a lot more chop. We generally see both longs and shorts evenly split. Moving on to the volatility index for the 30-day period, we can see the volatility index is hitting record lows, sitting at only 1.26. The last time we have seen the volatility index on the 30-day period be this low was all the way back in July 2020. Looking at the 60-day volatility index, we are also pushing to new lows, sitting at 1.87. The last time we have seen sub 1.8 was back in 2016, guys. Volume and volatility for cryptocurrency are at record lows, but what does that mean? It means a big and important move will soon follow. Let's take a look at the DXY. The DXY has hit an incredibly important level of resistance after a phenomenal week. July, we saw the last week of July, awesome for the DXY. A massive rally upwards from a major point of support to retest that high time frame downtrending resistance level. And this is an incredibly important level to watch for. If we break out over here, this will be very bearish for the markets. It could push the stock market lower. It could push Bitcoin lower. If the price rejects and continues downward, losing these supports, this will be very bullish, and it could provide a decent amount of support and relief for both cryptocurrency and stocks. The main determinant of whether or not DXY continues upwards or downwards is, of course, as we all know, the economic climate in regards to inflation, in regards to interest rates. We do have some very important data coming out very soon. On the 10th of August, we have our CPI data, our core and normal inflation rate data for month-on-month and year-on-year. And of course, on the 11th, we have our PPI data. Both data sets incredibly relevant in predicting or assuming the potential future interest rate hikes that the Federal Reserve will decide on. If these pieces of data come out bearish, we can potentially expect more future interest rate hikes, which will push the DXY upwards and drag the markets down. If these data comes out bullish, we could expect the DXY to drop in anticipation of decreasing interest rates or fewer future interest rates, and that could drive the markets up. Let's take a look at S&P 500. The S&P 500 is in a very delicate position, retesting and rejecting from our major uptrending channel resistances. Our rising channel formation, it is a rising channel over about a 10-month period. It has retested the upper level and has rejected into our first major support at 4,500. A loss of the major support at 4,500 will result in a move towards our next level of support at 4,300. A loss of our high time frame uptrending support level, which is represented by this uptrending trend line, could put the S&P 500 into a weekly downtrend. If the bulls want to reclaim control, they need to start pushing the price over these 4,600 highs and start to break upwards and start to ladder upwards. Again, where the S&P 500 goes will be heavily dependent on what the DXY does and the potential implications of future interest rate hikes, whether or not we see higher or lower. The Dow Jones is in a very similar position, so we're not going to go over it. Let's go ahead and jump into Bitcoin. Now, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So to start the video, there are 2 of the most important levels you should be watching right now for Bitcoin, and these are, number 1, the current downtrending channel. The downtrending channel that we are in is an incredibly important level, as this represents the overall downtrend for Bitcoin as we have been in now for the last about 2 or 3 weeks. And number 2 is going to be the uptrending level on the daily/weekly chart, but more importantly, the RSI on this level. A loss of this RSI will result in a negative momentum shift, which could push the prices down for Bitcoin on the weekly chart. We're going to come back and analyze and discuss exactly what we're looking for here and exactly what this means later in the video. We're going to start off on the smaller time frame, discussing what we have seen and what we are seeing now. So over the last couple of weeks, we have seen a horizontal consolidation play out for Bitcoin around 30,000 to 32,000. We saw this consolidation develop and we saw a deviation to the upside, retesting that 32 to 31.2k resistance, this being our resistance. Ever since then, Bitcoin has been in an overall downtrend. Upon the loss of 29.8k, we've entered a daily bearish trend, right? So under 29.8k, we've entered a daily bearish trend. This downtrend has now been in play for about 2.5 weeks. And as we can see, we've developed a parallel channel. This descending channel is a parallel channel. It has equal width and it has 2 equally placed trend lines, both descending. They are not converging, they are not expanding. We can see this downtrending channel represents the overall downward trajectory of the price action for Bitcoin, and this downtrending resistance, this upper level, is going to act as a trigger point for Bitcoin to continue upwards. If we take a look at the measured move, we take the width of this channel, apply it to a perceived breakout point, we can see the perceived breakout point for Bitcoin is sitting at 30,800. This is very important, as 30,800 is above our key bullish trigger. The key bullish trigger being this level right over here, the level I'm circling, the level between 30,200 to 30,400. You can see it's represented by the POC on the VRPV. This level here, this spike in the POC, represents the point of control, the point of the highest historical orders and resistance within the visible range. The visible range is every bit of price action we see in the chart. Therefore, it is a bullish trigger. Therefore, if we break above this level, we are technically going to be pushing upwards. Not only pushing upwards, we can see the resistance as we push upwards from 30,400 into 1,200 is decreasing. This decrease in RPV represents decreasing resistance. Thus, it is easier for the price action to push upwards once this level breaks. Moving downwards, we have increase in resistance from the current price action toward that level, and therefore there's a higher amount of resistance and difficult for the price to continue upwards. If the price is able to break above 30,400, it is very likely the price will continue to retest this upper range of resistance at 31.2 to 31,000. And that will flip the daily trend bullish. As remember, the daily trend is technically bearish right now. Looking at the current channel, we can see a few things. Number one, we can see the channel extends into a very important level, which is 28.4. Furthermore, it's very important to understand that just because we are in a descending channel, it doesn't mean we are going to immediately break out. We'll discuss in just a moment exactly what we are looking for to predict a breakout, but just for the sake of it right now, just because we're in a descending channel, it doesn't mean we are going to immediately break out. We could very well see a rejection into the support or even lower before we bounce upwards. And I do want to go ahead and say, if we do see a breakdown of 28.4, the breakdown of 28.4 is going to be insignificant unless a weekly close below that level occurs. 28.4K will not only represent a major horizontal support on the higher time frame, which is represented by these local highs, but it also represents the upper band of the Gaussian channel. If the upper band of the Gaussian channel is lost, that will signify a shift in high time frame strength. If we see a breakdown, we see a shift to weakness. This is a shift to weakness. If we see a break from the bottom side in, that is a shift from weakness to strength. If we see a break from the top side down, that is a shift from strength to weakness. So a breakdown of 28.4 and a close below 28.4 is going to signify a shift between strength to weakness on a weekly chart. And if we see that shift on the weekly chart, we are much more likely to not only get that breakdown on the RSI and therefore shift momentum negative, but also get the breakdown of the uptrending support line on the higher time frame and thus send the price into a weekly downtrend. Very important stuff. Going back to this chart, guys, how can we predict a breakout and what are we looking for to expect the breakout? So looking at our technical levels, there are two technical indicators we are looking for. Number one, we are looking for 3 points of confirmation for a confirmed breakout. That being, the momentum will have to flip positive, meaning the RSI is going to have to break above our downtrending resistance. This would represent a positive momentum shift. Number two, the CVD, the cumulative volume delta, is going to have to clear these local high points. And number three, the price action will have to break above the downward trending slope, representing the overall downtrending trajectory of the price action over the last 3 weeks. If we get all three of those things, that is going to be confirmation of a breakout. If we get confirmation of a breakout, we know what to expect and move into this range. Moving down from there, guys, if we see only a break of this downtrending resistance without the technical indicators breaking, say for example, the price breaks upwards, but we do not see the RSI cross and we do not see the CVD cross, this should be a warning. You should be on alert. This is a signal of weakness still and could act as a potential deviation / fake out as we saw over here. We need to see the price break upwards with the strength behind us. Remember, these indicators are reflecting strength. If the price goes up, but there is no substance to that move, the price is likely to not continue upwards. So if we see the price action break upwards without these indicators flipping bullish, we do not expect a continuation upwards. And I'll go ahead and say this. If we see these indicators flip bullish, but we don't see the price break upwards, that could be leading for the price to break upwards. So if we watch those indicators flip bullish and the price is yet to break upwards, that would be a leading indicator that the price is likely to continue upwards. Breaking it down one more time, guys. We are in this ascending channel. For the price to flip bullish, we're waiting for at least 2 points of confirmation, RSI and CVD. If we get the third point of confirmation at the same time, which is the price breaking upwards, very bullish, we can continue upwards. If we see any sort of correction, we have to ensure that the price remains above 28.4k on the weekly scale. It doesn't matter if we come down and retest these lows and push back upwards. That is a real possibility. As long as Bitcoin holds a weekly candle above 28.4, the weekly Gaussian channel and momentum will be defended. If we see a breakdown towards this level, this price action should not worry you. This should not concern you. This should not scare you, because this is expected, right? When we see a move towards the lower range of an expected price range, that is not random price action. It should be considered normal price action, right? So if you see the breakdown occur below 28.4, we retest these low points at 27,000, 27,200, that is a perfect opportunity to enter longs and to buy, to look for entries again. Do not be scared by that move. You'd only be worried about that move if we lose 27,000, as that would confirm deviation below that normal range of price action, that normal expected range of price action that could potentially push the prices even lower. So watch out for all of that. Let's go ahead and take a look at that high time frame daily. So we talked about 2 points at the start of the video. Point number one, the most important thing to watch is that daily trend. The next most important one is going to be the RSI, as a negative shift of momentum on the higher time frame could potentially facilitate a shift in price action downwards. If we see the RSI breakdown, that would indicate a negative momentum shift. And if we see a negative momentum shift, we see a significant shift in the strength of price action, as not only are we going to get the RSI flipping negative, but for the RSI to flip negative, we will most likely have to have lost that 28.4k level, and therefore we have negative strength, we have weakness moving into a level of support, and that could facilitate a breakdown. Moving back to this chart one more time, I do want to make one discrepancy. There is a big difference between weakness or diminishing weakness and strength. It's very important to understand that. Right now, what are we seeing? We're seeing diminishing weakness, but we are not quite yet seeing strength. We are seeing diminishing weakness as we have a downtrend that is starting to consolidate sideways, then thus diminishing weakness, okay? But we have not yet quite seen strength. So the trend right now could potentially continue downwards until proven otherwise. So do not look for massive high time frame positions. Wait for those confirmations. Going back over here, guys, if we see the breakdown of this uptrend, which is very likely, will I say, if we break momentum. If momentum flips negative, we lose 28.4, we enter this weekly weakness trend on the Gaussian channel, we are much more likely to break down from this uptrend trajectory trend line if we retest it with those conditions met. Where will the price go next? 25.2 to 24.4. Very bearish, very bad if that occurs, as that would reflect a shift on the weekly scale in overall trend. We have been in this trend now for at least 8 months, 9 months maybe. If we lose this trend line, that would signify the uptrend that we have been in now for 8-9 months has officially been lost. What could be more bearish than that? That would be very bad. But until then, the uptrend is intact, 32,000 being the bullish trigger and this trend line being the bearish trigger. If we break above 32,000, the price will continue upwards. We have all of that information. We've discussed it so many times, everything is suggesting that. If we break down from this uptrending support line, we will continue downwards. Now the markets are in a very delicate position, right? We have CPI coming out. We have interest rate decisions potentially hiking up in the future. The markets are hanging on by a thread. Look at where the S&P 500 is. Very important level, right? Look at the DXY. Very important level. If the DXY continues downwards, the markets will find relief. But if we see the DXY break upwards, and if we see the potential trajectory of future interest rates increase again, excuse me, we could definitely see Bitcoin correct. So it's very important, guys. Not only do you understand what's happening from a technical perspective, what is happening in the charts, but you understand what is driving the price action. So we're going to go over that really quickly. If interest rates continue upwards because inflation continues to rise, we are likely going to see the future perceived systematic risk increase and the future trajectory of potential future interest rates increase as well. If that happens, the cost of debt rises. The cost of debt rises. If the cost of debt rises, debt to service ratios for consumers, for companies, for retail increase. That requires more cash flow to go ahead and service. That results in individuals, retail, avoiding investing or selling assets. It results in companies offloading assets to increase their cash flows on their balance sheets to service this debt to make their companies look more healthy. We could see the same thing we saw last time when interest rates started rising again, which would be another sell-off. So watch the interest rates, guys. If interest rates continue upwards, and not just one interest rate hike, but if the Federal Reserve say we're doing an interest rate hike today, we're going to 0.25, we're going to 0.5, and we're going to continue doing that for another 6 months, that will result in the markets correcting, okay? You have to understand what is driving the price action from behind the scenes. Thanks for watching, guys. I hope you enjoyed today's video. If you made it this far, thank you, because this is actually the second time I filmed this today. I've been talking now for over an hour. My voice is killing me. Thanks for watching. I hope I got everything out still from the first time, sorry. And go ahead and sign up to our Crypto Academy courses at gmail.com. It is a website down below where we teach you guys how to trade. Thanks for watching. See you guys in the next one. Cheers.